Okay. So first of all, it's really nice to see all of you here today. It's been a great journey with the Crypto Valley Association, having this idea of organizing this event just a few months ago, and we built up a team. And it's amazing seeing all of you here. I think we also timed the market pretty well. So next time you want to know when is the all-time high, just check the Crypto Valley agenda. So yeah, great to have you. Great vibes today, and we will do this panel together. So this is the evolution of digital asset at banks. I'd say an OGs panel, because most of you are, all of you are one of the earliest adopter I know in the crypto space, with all your previous experience and your current role within banks. So yeah, what a ride! 2017, I think that's the year where everything started for crypto and banks in Switzerland. 7-year journey. So we started from a bank, the first bank is here, Swissquote, to allow crypto trading. And now I think it's roughly 18 to 20 Swiss banks which are active to some extent into crypto. Now we are not only doing trading, there is of course custody, payment, staking, lending, tokenization. So that's a clearly mature project, and it's been built thanks to the progressive adoption of the Swiss banks. I think we are still one of the pioneers in terms of country. First European bank to allow crypto trading back in 2017, Swissquote. 2017, first in Europe. Then we got the first FINMA regulated banks. We had Amina just before. We'll have Signum later this afternoon. Then the private banks came. Arab Bank 2019, I think 2019. Julius Baer, Bordier, Merki, Bowman's, you name it. Then the cantonal banks, and of course InCore. You said me that you were InCore started back in 2018 or 17. So yeah. Exciting panel ahead. So yeah, by the way, I'm Jérôme Bailly. I'm the vice president of the Crypto Valley Association. I'm also working for Ad Novum, developing the Romain market for fintech and crypto for this engineering and cybersecurity company. And yeah, today I have the chance to have 3 panelists. So let's start with Roger. From InCore. So I let you say a few words about you, your journey into crypto, and your current role at InCore.
Yeah, sure, happy to. Personally, I got into crypto about 10, 11 years ago. I didn't think of it as a job back then, obviously, but things develop. I got, after a few fintechs, I got into consulting for a company in Actas, also a sponsor here today, and my boss is here too. So. After that, during that time, I got to know InCore Bank, who was a client of mine. I accompanied them into the journey into the world of crypto. And there ended up just to be so many other exciting things that I felt needed to be done. So I moved back into banking.
Excellent. Thank you, Roger. Then Romain.
Yeah, thanks for having me. So basically, yeah, same. We have a similar path with Roger. That I discovered crypto in 2013 and jumped into the industry. Back in the day, we were not so many. We were only a few of us. And I joined Arab Bank in 2020, to basically develop all the digital asset services and to bring like a new kind of clientele. So how we do that, what we do at Arab Bank is a private bank, is a sister company of one of the largest banks of the Middle East, Arab Bank PLC. So Arab Bank Switzerland, we have like 3 components which make us quite unique, and that's why you can apply blockchain and digital assets in all the fields, in all the verticals. We have private banking, obviously, since 1962, but we do commodity trade finance, which is also like one of the large part of our business, and treasury activity, treasury management. So these 3 business lines can rely on blockchain. And the bank was very early to understand, the power first of Bitcoin as kind of aspirational store of value or digital gold, but also for all the business related later, how we can build the, world infrastructure to have frictionless, exchanges around the world.
Excellent, Carlos.
So for me, I was also kind of early, although I was too young back in the day. So I discovered the concept of Bitcoin in December 2010. I even mined back in the day in 11. I didn't even know how to configure things. Pools were just born, so I was mining for other people for a certain time. So for me, it was a discovery thing, and I treat Bitcoin, at least until 2011, as something funky that I wanted to use with my friends to exchange value playing poker. So it was a very simplistic approach. We tried to do it. Of course, summer came, and after coming back from summer, everybody lost their wallets or lost interest. I still got a lot of traction into the space, and then I kept it up. Professional side, nothing to do with crypto until 17. I was working in asset management and private equity. In 17, I started to see, okay, this world of crypto of mine, that now it's a relevant thing in the economics. Let's see what we can do with the utility part, which is what interested me since the beginning, because I had more of a scientific background rather than an economical one. And so I also started projects around tokenization and things along those lines. So it was really an exploratory path. For Swissquote, I think it was barely the same. So it started way before I joined the company. I joined 2 years ago, no more than that. Swissquote started in 17, as you said, as a first bank. I think in the idea of Swissquote is to innovate, to challenge the code, as we say internally in the bank. And we want to be one step ahead, and we thought that crypto was the next investment vehicle, or the new, as they call it now, the new alternative assets, as Blackstone would say in their publicity. And I think alternatives are here to come. Crypto is becoming, and Bitcoin especially, with the aspirational reserve value currency aspiration that it has, it's also becoming some kind of the most liquid alternative investment that you can find. This has been the myriad of private equity for the last 20 years. Now they want to try to put things in the table of retail. It's getting more complex. Crypto already did it. So I think we have very, very interesting times ahead of us in the space.
So yeah, we clearly have a very well balanced and diverse panel. So we have a B2B bank, a private bank, and a retail bank. By the way, also Zurich, Geneva, Vaud. We are diverse at CVA.
The trifecta.
But you shared one common point. Your banks were all pioneer in their field. So let's go back a bit. And I know you were not all of you working at the initial, but what were the initial motivation for your banks to jump into this crazy, especially 2017, 19, crazy world, facing so many challenges? So which motivation, initial motivation? Maybe we want to start.
Well, for us it was actually quite easy, because as you said, we are B2B bank. That means that we serve other private banks. Now, when you have so much exposure as we do indirectly to the market through these private banks, crypto was a topic that came quite early. When the first clients of these private banks started asking about crypto, obviously the request would come to us, and the question came, well, this is another asset. You do bonds, you do equities. We want to do crypto with you, and this is why we started the process. We didn't. It's something we always do, right? The new request comes in, you cater to it. In the beginning, it was brokerage and custody. It developed over time. There came more offerings to it. There's still offerings being added.
And Romain, Arabank was, I think, the first in Geneva moving into crypto. Why?
Yeah, I think.
And why so early?
Because they caught the idea of Bitcoin very early. When I met Rani Jaban in early 2017, so before the bull run, he was the first banker to catch the idea of Bitcoin and the potential as an alternative asset. He did understand very quickly, in less than 20 minutes, that the separation of the state and the money was Bitcoin. And that was like a great journey, because as a managing director and head of treasury, he has pushed the idea internally to say, okay, we have to list this alternative asset, because the fiat system is currently like inflationist, and we have to offer like it's a growing asset basically, and it will grow over and over the time. And so far, you know, like fact or data has proven that he was right. So the transformation of a traditional bank to a modern blockchain-ready bank, you know, takes time. It takes some willingness, you know, from the board, from the executive management. A real, you know, like change happen only with a human behind who do understand or who do learn the technology, who do want to understand, who are willing to change, and that's what makes like a successful transformation. Like 5 years later, we do custody, so we have a full solution of custody, of trading desk with multiple liquidity providers. We do lending, we do staking, we do advisory, discretionary, and even NFT. So we are really at the forefront as a bank, at the forefront of innovation. But because we have a demand from clients, and there is a need when you have like a substantial amount of assets, the self-custody is not enough. You need to think about the future of your generation, multiple generation. You need to think about how you custody when you are a company, an enterprise, and how you manage like all this risk. And that's why, you know, banks have to position, I mean, at least us, we decide to position ourselves.
Right. Carlos,
Yes,
2017 first, not only in Switzerland, first in Europe.
Europe too, yes. It was, I think the traction was quite easy to get because, first of all, the first wave of crypto Gs, as you said before, were very related to technology. Our bank is composed mainly of engineers, so there was also a bit of traction internally from an employee and also top management point of view, mainly one of the founders. So that conjugated into the fact of saying, okay, we want to get exposure to this, we want to allow our clients to access it. It was not necessarily a fully fledged client demand like private banks that you cater a more, both of you have a more, let's say, on-demand work to do, like similar to consultancy. In our case, being more retail, in general, we have a good mix in between, okay, this is a good idea, makes sense. Our clients are demanding it to certain levels. Let's try and let's see what happens. And for crypto, it was a little bit the same. We started with a basic offering. I think we all got to the same route that, for example, the new cantonal banks entering the space are doing, like Orpus Finance. Now we get the top 5, top 7, top 10, and then we grow from that. First, it was, most of the operations was outside of our bank. Of course, external counsel, auditors, regulators, myriads of questions, myriads of IT challenges that probably a few people understand, like, yeah, you want to put more than 3 zeros after the comma. Good luck with that. Our core banking doesn't support, so you need to rebuild the thing. Then you need to revalidate with an external auditor, and then the external auditor would say, okay, this makes sense. Now you can go to the regulator, then you need to re-explain to the regulator. So I'm coming also from venture capital myself, and talking with fintechs, I'm like, yeah, you have problems, like you don't have a regulatory framework, congrats for that. But the internal hurdles that you get other than, let's say, internal politics and board, management, compliance, there's a lot of work to do.
So you said problems, so let's double click on the challenges, limitation, issue that you had to face since the beginning until now. Is it more technological, regulatory? Maybe you can name a few. I don't know who want to start.
I can start. So for us, the main challenge from a product point of view facing retails is that the product seems and is different from what they get in traditional crypto exchanges. So that's the first and biggest challenge for us. Because why? Because all of these problems that you were mentioning or hurdles that we need to sustain. Like we cannot have cryptos on our balance sheet. It's like holding some toxic mortgage-backed securities back in 2008. So we need a tier-like of reserves that is unheard of. And depending on the size of the bank, it can go up to 1,250%. Meaning essentially you cannot hold anything on balance sheet. So lending operations get a bit complex and a bit more difficult to get. Then the example that I was putting of, Bitcoin has a nominal value today of 60,000 or whatever it's now because it's changing every minute, $60,000. Okay, you want $10 in Bitcoin, then you need 4 or 5 digits after the comma. The core banking systems, of course, were not thought to work like this, and our entire banks run on these kinds of software. So another IT hurdle. And I guess you have many more examples like this.
Yes, I agree with you, Carlos. I think it's really about like you need to be like a critical thinking and problem solver because you face like back in the days when we started like 2018 to think about like how we will integrate into the core banking systems, they were not ready for that, and still not ready at some point. Some of them, we have a lack of support, like transforming like a monolithic core banking system into something modular, because blockchain is about modularity. Blockchain is about like building microservices that can interact between each other, and they are moving super fast. So these parts are moving parts, and you need to be able to have resilience between the services and to be able to update them. So if you have like a monolithic system which you don't control, then after you enter into like bottlenecks. So this is a reality. This is also a reality with the regulators, you know, to have like some interactions to make sure like you can get the approval before launching something, because you're not a startup, you're not like a financial intermediary, but you are a bank with a license which require a lot of checks and audits, internal, external, and so on. So coming from the startup world or traditional, like say, corporate IT and so on, moving into a bank was a discovery internally, because I work with external banks, you know, as a consultant. But when you move inside, then after you face some challenges, but this is obstacles that you can bypass. Seriously, if you have this willingness. So again, it's a question of first education, training internally, you know, learning, you know, like teach to your clients, you know, about like why, you know, holding your own assets, it's important. I mean, obviously you can use the ETF and so on, this is great, but holding your own assets has a different, it's really different in terms of power, what you can do with it. And this is something that people have to learn, people inside the bank, outside the bank, and we face obviously few challenges always, but there is no blocker. So we can always move forward. But again, you know, as a bank, you know, the risk management, the compliance department is also key. As said Paolo previously during his meeting, I really endorse it. Like, you have to understand, like, if people from the compliance, we have talented people in our compliance department who understand very well our clients. And the most important thing is to understand how to onboard them, how to feel these clients secure when they open an account with you, and not feeling like criminals, you know, what most of the banks are doing when they are shutting down the accounts because they don't understand any transactions. The technology of blockchain is much more like easy to corroborate than any other technologies that they used to use, let's say paper. Yeah.
Thank you.
Yeah, you mentioned education, and I think education was really a big part. Of course, core banking systems, I mean, they're not made to change fast. And but these issues aside, there were a lot of questions that just have never come up before, like, for instance, assets, you usually keep them with a custodian. You have them somewhere, you can call someone. So suddenly you have this idea that you're going to keep your own keys. So what does that mean? Do you need a counterparty limit for the technology provider that gives you the HSM modules or not? What about the exchanges? Well, we need 3 years of history on company reports before we can set a limit for a counterparty. Well, they haven't been around for 3 years. They're still new. So all these things needed a lot of education, a lot of convincing, and many of the conversation you not only have once or twice, but several times, because there's internal audit, there's external audit, there's the FINMA, there's your board. But after some time, you get good at it.
Yeah, but I guess it's also the same circle that the community believed, you know. I remember the first comments in forums were about geeky technological things, a bit of politics, etc. Then it became like, what lawyers do you recommend? What jurisdiction should we live on? Where do you open a bank account? Then it was like, okay, what do I do with the money now? This is becoming huge now. Should we go to private banking? Should you go to yourself? So banks has the same. We had the same evolution. We were like, okay, let's try it. Willingness, resources invested. Now, what is the next frontier, and what is the next things to come? So it's a really, really dynamic and interesting thing.
Yeah, and that's true about you know, like documentation with counterparties. When you want to trade with new counterparties, you have some credit risk, you have some limits, you know, for deposit or to manage. And how you do when the counterparty doesn't have the documentation. So nowadays, all these like new players in the crypto space or crypto exchanges, they are like up to date. But back in the days in 2018, 19, they had like almost nothing. They didn't want to share any audits. They didn't want to share like any board resolution and so on. So basically, coming from as a bank, you know, with all the different like players you are already in the space with, you know, you had like a discrepancy about like what you expect and what you have. So it was a bit difficult. Nowadays, all this all this problem has been tackled. Now it's more about like how we build like a global infrastructure to make it like a more efficient, more capital efficient, and this is like the big challenge where we stand. But in Switzerland, as a bank, and again, it's different with startup and fintechs, which I think it's sad. But as a bank, we have all the tools to build a global infrastructure. So it's a willingness. So are we all together taking the opportunity to be still at the forefront of innovation in the blockchain space as a financial global leader, or do we let it to other countries which will run much faster than us if we don't take this opportunity?
Yeah, we're no longer alone. As Switzerland, as a country, it's no longer alone. Like, just check Commerzbank, Deutsche Börse in Germany, for example. The last moves they had, all the big banks in Spain, they have 100 plus, 500 plus employees on their blockchain divisions, and they do things. And again, they see blockchain not necessarily as we are envisioning it today in Switzerland, as an investable asset class that is alternative, plus some utility levels, plus the tokenization aspect, but also as, okay, I have internal problems, I need to connect to multiple banks, and this is a mess between plenty of jurisdictions. So yeah, it's a solution and a problem.
Yeah, here we definitely need to work together. I mean, in the beginning of Crypto Valley, there was a lot of like, oh, my competition is in Zug, my competition is in Zurich, but really our competition is in Singapore, it's in Dubai, probably the US, and these jurisdictions are moving really, really fast. So if we want to keep up, we need to work together. We need to combine efforts also on the political side, to make sure that regulations and laws continue to evolve in a way that doesn't stop the industry from innovating.
Absolutely, yes.
Yeah, I can't agree more. That's also the positioning of Crypto Valley. Since the beginning, it's not Zug versus Zurich, versus Geneva or versus Neuchâtel. It's all together to continue what we've built and now play on the global field. So thanks for the history, and let's come today. March 6th, yesterday, all-time high, $69.2K US dollar. So what does it change? Do you see emerging trends, new demand, new products? What's happening right now? Like it's crazy period. Tell us what you're living on an everyday basis.
Well, if I take this opportunity, like ETF has legitimate Bitcoin as a financial asset alternative financial asset within any portfolio. So we did simulation from 1 to 5%, like on a traditional portfolio, and it's already like outperforming like traditional portfolio only with 5% diversification. So the risk is pretty low, you know, against the reward. But for most of the people, they were waiting like an approval from like big asset managers like BlackRock, that they vet that basically Bitcoin is an asset class. And so far, is the most successful ETF launch ever.
Better than gold.
Better than gold, much better. It's like 50 billion right now. So at some point, you know, like we see new cycle of people, newcomers.
But who? Institutional? Is this bull run fueled by institutional, or do you also see retail? Like
we see institutional, and also obviously people who invest into ETF are people who can access now to Bitcoin, whereas they could not before, except if they were using banks like us, but we were not so many, right? So these people know they can access very easily to Bitcoin. And there is like a lot of assets managers, advising, this diversification. So people are still probably like in the way to get some capital gains. You know, they don't think about like, aspirational store of value. So they want to take profit probably. Like, but people from the last cycle, they did learn about Bitcoin. They did start to understand, why it's good to order, probably like to hedge against inflation. Your Bitcoin in 2017 or in 2014 has much more buying power than, your fiat currency nowadays. And it's every cycle. You can see that with one Bitcoin, I was able to buy a watch in 2016, and this watch now could be a Patek Philippe, why it was just like a kind of Casio, right? So this is the example of, why Bitcoin is probably like protecting your wealth in the future, and why people want to keep this kind of asset in their portfolio as a long term. While ETF, probably some of them, they want to take profit, like a short profit during the cycle. So let's see how it goes.
And Carlos, what's happening on your daily trading? Like, it should be crazy to be a...
So we present results soon. We're publicly traded.
Okay, can you share a few insights? No?
You can. The only sentence I'm allowed to say is like, volumes go up with price, and volumes are related to revenue. So you can check our stock. I think it speaks by itself, so I'm not saying anything perjurious against it. But no, what we see is first that retails really are hodlers, as we said back in the day. Now there's a real accumulation from retails from 17 to now. This is a trend that has kept growing, and you have more and more new clients entering, and more old clients keeping up with the reinvestment, even though Bitcoin was for 2 and something years in a complete like flatlined and had not too much price action. But at the same time, we also see, and especially on-chain, because this is a bit more niche and you need to check, because institutionals are not going to Coinbase and Binance and buying with stop limits and limit orders. Like, no. They're buying in OTC desks, and you can see, I don't know if people here know, for example, in Twitter you have Whale Alert that notifies you every time there's a huge movement in a relevant blockchain, and you can see suddenly volumes of big movements spiking. And it's not only people de-investing from the asset, because now they're becoming extremely wealthy. And as you said, before 500 Bitcoins was like 10 blocks of mining, because mining back in the day was 50 Bitcoins for mine. Now suddenly it's like, okay, I have like a few multiple $1 million in my hands. What do? They panic. So we have this kind of people too. But for the ETFs, I'm not sure. I think there's all this entire world of sovereign investment funds, and privately managed pension funds in the US, Canada, and all the Anglo-Saxon countries plus Middle East that are now going to move very slowly into the asset, but very slowly for a fund that manages $550 billion. Is like, okay, let's do a small allocation, 1 billion. Yeah, that's literally the volume, the net inflow that you can get in Binance in 5 days for an asset class like Bitcoin. So I think, yes, there's a clear institutionalization. I don't know if institutionals will play the game of entering and exiting. I'm not sure about that. To contradict your point there, I'm not sure. We also see endowment funds from universities in the US that are also a good reference point, like Stanford and MIT. They are now getting 7 and 2 or 3% allocations respectively. So it's a very relevant figure for endowment funds that are above 10 billion. So yes, I think this is going to have a huge impact. Also, volatility I thought was going to be slightly reduced, not the case. We touched 69, 69.3 on Coinbase, 69.2 on Kraken, 69 on Binance, and we went down to 62, 59 even with some liquidation. So it's a process. I think it will become a little bit more stable, not as gold or an asset like very stable asset class. It will be still because liquidity is not at the forefront of crypto today.
Thank you.
But yeah, it will be interesting.
Okay, last 5 minutes. Roger, your point of view from InCore, what's happening, the new trends,
Well, I believe that we're going to see in 2024, for the first time, some more professional things that go beyond just cryptocurrency. I mean, Bitcoin, Ethereum, they're now being taken seriously as an asset class. You see research published about them. But we forget that there are other things that we can do in crypto. There are assets we can put on a blockchain. There are ways we can trade these.
You mean tokenization?
For tokenization, where you have assets traded on decentralized exchanges in ways that haven't been possible before. Now, of course, it's going to be a journey. We will probably first see tokens getting traded on proper public exchanges. I mean, the way we already see traditional stocks being traded, and that will continue from there. And in this respect, I think we're just finishing phase 1 of many.
and I think it will be sudden too. I think for the moment it's quite quiet. It's in general mini projects or projects that were financed privately before. They tried the STO coming from the ICO summer of 17. I think suddenly we will have like 10, 15, 25, 50 billion STO rather than an IPO. And then people will start to notice like, well, what was this? And I think from that point, they will see efficiencies, they will see the time it saves, because the financial system is absurdly complex today. Like when I try to explain to my non-financial friends how a stock moves when they buy or sell it on the broker, is like surreal. The level of interchange and third parties that are involved in a single trade, it's ridiculous.
So STO, talk about security token offering. So we've seen, as you say, the ICO wave back in the days, and still continuing. But how can we really go into the security token offering? Like in Switzerland, we have the regulation, but what do we need? Because honestly, so far, security token offering is quite low. So what's your point of view on that?
Infrastructure. It's as simple as that thing to start with. Infrastructure, willingness, and
a secondary market also maybe, no?
No, yes, infrastructure. An exchange is a piece of infrastructure. It's not only holding the tokens, it's legally building because it's not as simple as it seems. Like, hey, let's put a token. When it's a security, you need an entire legal entramado that will explain what do you have and what is the reflection of it, especially if you want to do it natively digital. So yeah, I think infrastructure is like the key part. If I'm a client of Vontobel or a bank that is, well, no, Vontobel has some level of, but a UBS client, like a normal one, they want to access an IPO, it's possible. They want to access an STO, not for today. So I think that development of infrastructure that is happening in big banks, not with fancy projects, but infrastructure boring project, it's going to be the key. And then the products, that's the second piece. Once you have the infra, then you need the product. Crypto was a product first.
Last 2 minutes, Romain?
Yeah, probably just to add, I mean, technology, of course, is key. We need to have this global layer, but also like for like second market, how you assess the price, of STO. If it's like a little company, how you can verify, because right now the cost of production of information is almost zero. With GPTs, with AI, we can produce like endless information. But the cost of verification of the data is increasing. So basically, we are overloaded by data, and we don't know if this data is correct or not. And then after, like on the second market, it's even more complex to find, some accurate data, because it's really about like how you have information of this on this STO. So it's a chicken and egg. You need the liquidity or like second market to bring new clients to STOs, but also you need to have more information on this.
Okay, I see the time. I just want to finish on a very simple phrase from each of you. Like the trends to look, especially this year, 2024, if you have to name one thing to... We want to start. We want to start. Roger?
Yeah, I started with it earlier. I think tokenization is going to be a big thing in 2024 with upcoming secondary markets, where ironically banks will probably play a role in giving and vetting access. Yeah,
correct.
You took it from me, Roger. That's slightly unfair.
Yeah, on technology side, I would say like the zero knowledge proof. Privacy on blockchain is key, and the scalability. Because so far, like as we speak, fantastic. We see the price action, but the reality, if we want to add like all the real world assets on the blockchain, we have limitation on transactions at the TPS, basically. And the transaction per second are highly limited everywhere on every blockchain. Some of them, they stop from time to time, which is like currently like a huge threat. There is some new blockchain coming. There is some new infrastructure, and basically like the combination, we'll see probably like a correlation between like exchanges who are keeping like their engine, the trading engine, and also the banks who will keep the custody of multi-assets and multi-collateral assets.
Yeah, you said new layer one, ZK native. There is one just came to Geneva, from the US to Geneva. It's Mina Foundation, CVM member. I think there are some representatives in the room. So yeah, exactly what you said. So tokenization, ZK, zero knowledge, last one?
So I agree with Roger concerning tokenization, so it's unfortunate. But I would say also bankarization of crypto. I think crypto has reached the entire retail space more than what we thought, especially in non-Western countries. I think now it's going to be the time to okay, now crypto and my bank are the same thing. So bankarization of crypto could be also considered a trend.
And more banks. So as I said in the beginning, roughly 20 Swiss banks are active into crypto right now. I hope next edition, next year, we will at least double or triple. And some of you who are here, you will be on stage with us. So yes, thank you very much. It's been a pleasure having you.
Thank you.
And let's continue.